follows. A bunch of people have followed up. That's great. Trying to get, what I need to get is a couple things. I need to get 5 people chatting at the same time in chat, and I think that's not going to happen on like a Sunday when I just come on randomly like this. Probably is going to happen during the week when trade is actually occurring and there's all kinds of people around. I do appreciate the 18 people, though, that have followed me. That is really awesome. Now, I am usually, when it comes to these things, like, oh, you need 50 followers, I'm not the kind of person that's like, oh, I'll just grow organically. I'm usually like, how can I game the system? Can I pay someone $5 and I'll have 50 followers right away and get that done with? And that's kind of the kind of person I am. However, I know that there's a lot of interest coming from YouTube and stuff, so I think that 50 followers shouldn't be very hard to get, but we'll have to wait and see. The other stats that I need to kind of get the channel up and running, well, let's see if we can take a look at them here. I did have them up in that last video, but let's see. Achievements, Twitch, affiliate, requirements. Yeah, so I came on today just basically to talk about what happened Friday, and then we can kind of see how you're positioning coming into the week and kind of what you want to do. All right, so here we go. So to become an affiliate, you need to broadcast 500 total minutes broadcast in the last 30 days. Now, that's no problem whatsoever because I love to gab, of course. Otherwise, I wouldn't be a YouTuber, etc. 7 unique broadcast days in the last 30 days. So just come on every day, blah, blah, blah. 3 concurrent viewers. That shouldn't be hard. It seems like even when I just come on, just randomly people pop up. So, and at least 50 followers. So as soon as I get to within close of that 500 total minutes, then we'll have another push and we'll get up to 50 followers and we'll see what affiliate does for us, if anything. In the meantime, if you have been making some money trading and stuff, please give $5 to the Patreon. I want to get this stuff up and rolling. There's all these gamers out there that basically amuse you for a few minutes and waste your time, and they get tons of Patreon people. For me, I'm actually amusing you plus teaching you how to make money. So, kick a little bit back to a brother at times. All right. So let's go. So I was on Friday. I was on that that program, otherwise known as Volatility Views, and I had a bunch of stuff going on the day, so I kind of got in and got out of there. But it was an interesting conversation. To which, I always learn stuff about the products I don't trade that much on there, like the options on VIX futures. They were talking about a bunch of butterflies and stuff that was done in VIX futures. And let me just back up for a second. Let me welcome any new viewers to this channel. I'm trying to teach people. I'm an educator first. I'm trying to teach people about trading and the VIX and options trading and things like that. So I'm always open to your questions, and you can email me. You can leave a comment on one of my YouTube videos. On YouTube, I'm VIX Crush also. And I'll get back to you because I want to, that's my main drive behind all this is I want to help people. I want the VIX to be known by everybody. Like people walking down the street, they're like, oh yeah, the VIX really popped today, and I want more people to know what that means. So one way of doing that is just broadcasting. I go over some of the basics over and over and over again because we're always picking up new people, and this is the kind of stuff. My background, I was an options market maker, which I was one of those guys with the colored jackets that stands on the trading floor and yells at people all day, and so I have that background. I was sort of formally educated in options theory, and I lived and breathed options theory for a good part of my younger years of my life. So I'm perfectly capable of answering pretty much any options question you may have. And if it's something really esoteric, then I can certainly find the right person to answer that question for you. And, it's something that when I learned about options theory and options trading, it was something where we're not supposed to talk about it. It's proprietary to our company. We're going to keep it under our hats, what we know, so we can use it as a strategic advantage against other traders in the world. But, in this day and age, I no longer have like a non-disclosure contract in place, and the public has really advanced a lot since then as far as their knowledge of options and options theory. And I want to spread. I think the more people are educated, the more volume we get, and it just helps everybody out if everybody learns about stuff. I've focused most of my attention on the VIX just as a niche to kind of start out with, but I'm well versed on all levels of options theory. So excuse me. So some of this stuff is going to be real basic to you. Some of it's going to be maybe confusing, and I try to kind of put a little bit in it for everybody's level. Let's go to the term structure. Now, when you're talking about the VIX, people are always going to be talking about the term structure. And what the term structure is really basically is that the VIX is a number. There's a formula, and out pops this number. The formula is based on a strip of SPX options. And essentially, when people get afraid, big money managers get afraid, they buy puts in the SPX to protect them from the market going down. And when they do that, the VIX goes up. There's no direct way to trade the VIX because it's just this number based on a formula. It's kind of like an somewhat abstract concept. But what there are futures on the VIX. Now, futures on the VIX, they're kind of free flowing. Like they find their own level, and there's no like arbitrage between the VIX and the futures. For example, if you have let's say the NASDAQ, you've got the NASDAQ index, right? It's an index of 100 stocks. So when the futures go up, there's an arbitrage that's called between spot and the futures, where you could buy or sell baskets of the actual stocks and then buy or sell futures, and you'd actually lock in money if it's out of line. And so thus the futures and spot in like the NASDAQ stay pretty well in line, because if it went out of line, somebody would start pinging you, dinging you for money and taking your money away. So people keep it in line through arbitrage. There's no such arbitrage with the VIX. So the futures kind of free flow. It's like free. So this creates an interesting situation. And the way we look at the futures and their relationship to the spot VIX prices through the term structure, which I'm pulling up for you right now. Now, I apologize. I haven't got this whole Twitch thing down all that great yet, and I promise I'm going to improve. And what I mean by that is like half of this chart was off the screen last time I did this. So let me get out of the way here. I'm hopeful that this chart is on the screen, and as I'm talking to you, I'm going to try to actually look at this here. I'm going to pull up myself on Twitch and see if I can see if this is all in the frame here. And yes, it's in the frame. Okay, so what we're concerned about, most of us who trade the VIX are trading either one of the VIX ETPs, which are they're funds that go up and down based on the VIX or based on VIX futures. Most of us are trading either UVXY, VXX, VIX futures. Options on the VIX futures, or they might be trading the SPX directly. Some people trade SVXY. Anyway, but all the VIX ETPs, which ETP is exchange traded product, it covers all of those different things. Are based on the first two futures. So when we look at this chart, we're really only looking at the first two futures are the ones that are like actually going into the math that's creating these funds, this pricing. So we're looking at those. Those are the most important. The other ones, yeah, they're going to come online at some point, but they aren't as important to just calculating the price of these funds. These can be important as to sort of other ways of looking at things, and some people prognosticate in different ways. But we look at the term structure, and what we have today is a healthy term structure. And the shorthand for VIX traders who know everything I just said and are really bored with my explanation so far is term structure. On Friday, we had a pop in the VIX, but the term structure stayed largely intact. It just moved up a bit, right? So Thursday, the spot was 13 and change, and these futures were arranged, and they looked almost exactly the same. The difference, the contango between ACH and NOV has flattened slightly. It was like up to like 8% on Thursday. Now it's like 5.91%. But the whole term structure has just moved up. And held its position. Now, this is very good for us short vol people because it means we still have that much room for the stuff to fall. We're still in contango. A lot of people have been on me about overemphasizing contango and not talking enough about just the fact that the more space there is between this spot and both of these futures, the more room we have for this stuff to fall. And the way we make money when we short these things is for these futures that are up here constantly falling towards the spot price. It's kind of like a gravity thing. Imagine this is the Earth and this is a football, and it's falling towards Earth. So it's all these things are always falling, and that's what creates, that's what makes the opportunity for these things to go down lower. So if this was like a big spike that was really worrisome to people, we wouldn't see it just move up and stay in this nice contango shape. By contango shape, I mean it's the front month future is at one spot, and the other futures are kind of higher and higher and higher up as you go out in time. If this was like a spike that was really worrisome to people, and a lot of times, since I said the futures kind of move freely, the feelings behind the futures traders who are trading these futures are going to go into how the structure ends up, and what they're thinking and how they're seeing the future is going to determine the price of these futures. And in this situation, the term structure moved up nicely, which means A, we haven't lost any of our potential for this to decay over time. So even though we got to pop up, these ETPs are still decaying steadily over time. 2, there's not a whole lot of fear here. So, if spot had popped way higher and gotten a lot closer to the futures, it would indicate that there was a little bit more fear going on here. Now, you will notice that there is less than $2 now between spot and the front month future. There's a lot of talk going on when expiration came about how, wow, there's over $2. It's like $2.50. I think it got up to $2.70 between spot and the front month future. Now, we've slipped below $2. What are we? We're like $1.95, which is still a lot. But we slipped below $2, and thus it's kind of getting a little bit more like normal. One way of looking at this whole scenario is that the VIX went way down, but they've kept the futures up in anticipation of the VIX coming back up again. But the whole time that they're messing around with this and anticipating blah, blah, blah back and forth, as long as we're staying in contango, the stuff is decaying. The underlying, the ETPs are decaying. And what do I mean by that? I mean like a month from now, if everything was in this exact same spot, the price of VXX, UVXY would be lower than it is now, and the price of SVXY would be higher. So this is kind of a healthy move. Please do check out that discussion we had on volatility views. I want you guys to go and support Options Insider Radio, and there are really smart people there. Andrew G., who was on there with me, is a really smart guy too. He was one of my trainers when I was learning how to trade options back in 1994 or something. And they all have great products, and they're super smart minds that take stuff to the next level. But Andrew and I had a little kind of a difference of opinion, which happens among traders constantly, over what's going to happen in the future. Now, we both sort of agree that we're not going to see an average VIX of like 10 anymore, and that the average has kind of moved up. But I feel a little bit more like we could possibly revisit the 13s or the 12s in the next few weeks, especially if the market takes out the all-time highs. His opinion more that we're going to stay in a range between like 15 and 18 in the VIX. But remember, even if we stay right where we are now, as long as we've got that healthy structure where there's a lot of space between the futures and spot, and they're in this contango shape where like the front month future is lower than the second month future, and that percentage is intact. As long as we keep that, that is fertile ground for the VIX ETPs to decay. And for us as short VIX traders, a lot of the time I am short the VIX, and I'm looking for it to decay. Now, that doesn't mean that you can't watch this channel and be someone who trades this to the long side and benefit from it, because we talk about strategies on both sides, and some people are better at trading from the long side. I tend to believe. So you're not worried about the spike Friday and the spike continuing Monday. I'll get right to you, Idrid. And I lost my train of thought. So these things are going to continue to decay. Okay, so the question here is, so you're not worried about the spike we had Friday and the spike continuing Monday. The answer to that is no, and the reason is because I'm a long-term position trader. So the position we have on right now, it expires in 55 days. Let's take a look. Position we have now is a condor, and it's set up so that that we make the maximum money if UVXY ends up between 24 and 18 in 50-something days, which I'm looking up right now. 54 days. So, yeah, I've never been one to say that I can predict what's going to happen tomorrow or the next day in UVXY. Nobody can. I don't believe anybody can. Some people maybe they can, but I certainly can't. So, it's certainly possible that this continues to spike Monday. It's certainly possible that it moves higher. But my bet, and what I'm putting my money where my mouth is that between this week and 2 months from now, it will sort itself out and this will be lower. So, if we had a position on that was expiring this Friday, and I do have a small position expiring this Friday, then which I'll probably end up rolling out, then yeah, for this to get back to like 23 by this Friday, certainly a spike on Monday wouldn't help things and would be very worrisome. But if you have positions on that can withstand the time and you've given yourself ample time, then you don't need to be worried about smaller spikes. And the other thing with things that are farther out in time is if it starts to get closer towards the time, then you can roll them out. So, and the other way to just respond to your question about worrying about stuff is, I worry about stuff all the time. Anytime you have risk on, you worry about stuff. It's like, well, I could have just taken my whole position off and then I wouldn't have to worry. But if we want to be planning and we want to be planning and thinking ahead all the time for every eventuality. So, for example, even though we're short here, we want to think in our mind, think it through and say, well, what would happen if UVXY went to 40 on Monday? What would I do? How would I react if there's a huge spike on Monday and the VIX goes to 100? How would I react if the market rallies Monday and UVXY goes to 20? Because we don't want to be caught by surprise as traders. That's we don't want to be in a situation where all of a sudden something happens, we're super worried, we get emotional, and we're like, oh, I gotta get out. Because that's where you make mistakes. And certainly every person that trades is going to have stuff go against them. People are going to lose money. People are going to have positions go against them. It's just going to be how you react to that. And I tend to think over time my reactions are predictable. You could tell, every time that we're in a situation like this and UVXY went up like $2 tomorrow, I would do pretty much the same thing because it's something that I've thought out and I've been through before, and it's organized in my head about it. So it's not a worried thing. It's just like, oh well, the guy, we're playing checkers. The guy moves that piece, so I move this piece. It's just like a mechanical type thing. And yes, Amerimut, that's true. If it rallies, it would be a better entry for short. And what I'm going to do is I'm just going to type in here so that I get credit for having 3 people in chat at once. Yeah, so if you've got bullets, then you can react to a spike or something by adding more. Mickey dead, guys. I don't know. I got to tell you, I can't predict the future. My crystal ball has been out at the repair shop for about 2 months now, and I can't get a read. I know people are going to come on and talk about how, like, you know, it's scary. This is the scary time of the year. When the crash happened in 87 was, you know, this time of year, and there's that seasonal volatility. But, you know, is that price in the market? Is it not a price in the market? Who knows? I want to go on and just talk about our position here for a second, and our Greeks and whatnot, because we did change things a little bit on Friday. So let's go to our position here, and you can see the Greeks if I were to get out of the way here. It shows a short 226 deltas right here, and if we pull up the actual position, we have added to it. So once again, we do have this condor type thing going on, which means that we are just looking for this to be between 18 and 24 and 54 days. So as we get higher up, it's going to show us a shorter delta. As we get lower down into that area, it's going to have a you know, a flattening of a delta until we get like down towards 18, in which case it would show us being long. But you know, we're only a dollar, and depending on where you mark it, $1.34 away from this being a maximum profit situation. And we did do pretty well in that. If you look at the chart of the VIX here, and I'm going to come back to your comments in chat in just a second. If we look at the chart of the VIX here for the last 180 days, okay, we got short here. Then down here at 23 and change, we covered our short by selling out of the money put spreads and actually got long, okay? So we got long, it seems like at the very bottom right here. And then it popped Friday, and once it popped a little bit, we bought a few more of those 24, 28 put spreads to flatten out our deltas and get us a little bit short. And then it went up like a buck against us after that. So we've done pretty well. Oh, and Mickey Dead Guy's crystal ball has spoken. It's going to 28 again. Awesome. It's awesome. At least somebody has a crystal ball that's working. You shorted the spike Friday. Sold 25, 26, 27, 28 calls. Which month was that in, Idrid? And I like sell in May to go away happening this year. I like, you know, I would love to I want to have more people who are expiring next Friday. Okay. Well, fair enough. Well, we'll have to see what happens. I would suggest to you that if we do get a little bit of a spikiness and some of those are still kind of in the money by expiration, you could just roll them out a little bit. But as I was saying, I want to have people on here who are getting long volatility when we get these dips. Am I into TA? No. Everybody's going to cancel your membership. I'm not into TA at all, but that's okay. I know people make money and they follow technical analysis a whole lot. And it's kind of like their, the lens through which they see the world. And a lot of the things that I use in my trading, like focusing on momentum, time and sales and whatnot, are the same things people that are very into technical analysis use. I don't believe in technical analysis. Let me say specifically for VIX ETPs, because I don't believe it includes the term structure and the various forces that pull on VIX ETPs. I began my career and I look at the charts. I know exactly what my charts say and what they do, but I see the charts as like you're sitting over here in at a campground and there's smoke rising from the fire of a campground, you know, a little ways down. We can look at that smoke rising from the fire, the other thing I like to say is there is a chart room in every ship at the bottom of the ocean. No, seriously, most of my career as an options market maker, I was a delta neutral trader, which meant that we're trying to keep flat all the time. I understand that people make money using charts, and if you can make money using charts, then do what makes you money. Congratulations, that's awesome. But I'm not a huge believer in just technical shapes. I understand support and resistance and all that kind of stuff. I'm not a huge believer in that stuff really being able to prognosticate the future. I know there's this sort of caveat, but when I see somebody taking a chart of UVXY and saying, oh, it's a double bottom, it's a double top, this sort of thing, UVXY, once again, is based on
two futures, and the combination of the two futures changes every single day as they're rolled out. And a stock is based on supply and demand. You get buyers come in, the stock goes up. UVXY, you could have tons of UVXY buyers, and the bigger notional value is people trading puts in the SPX. So you could have tons of buyers in UVXY, but if people are selling puts in the SPX, all that buying in UVXY is still going to go down. So if you want to use technical analysis, it would make sense more to look at not the derivative product, but the actual product, which would be like the SPX or the E-minis. I look a lot when I want to figure out what's going on. I'm going to go to my E-minis and I'm going to back up the chart and I'm going to say, okay, well, look, we're just off the all-time highs in the E-minis. That's where we stand. If this tanks, VIX is going to go higher. If this rallies, VIX is going to go lower. So can't in and out of futures any day. So can't UVXY trade in and out of futures? UVXY is not actively traded at all. So no, it can't trade in and out of futures. It well, basically what people are doing is they're making markets around an index, and which is a 30-day fixed index. But the variables that go into the 30-day index are the futures prices. But UVXY isn't actively traded, so it's going to have the same mix of futures at all times. So if we look, obviously there's going to be buying and selling of the fund, and they're going to have to translate that into futures buying. So if we look at, for example, the daily holdings of UVXY. And I just pulled them off the screen. Let's see if you can see that. Okay, so right now, the swaps here, which is $36 million, which is a fraction of the $600 million, or what is it? $1 billion something dollars, is that? Swaps are a fraction of things, and you can just consider swaps doing the same thing as these futures. But right now we've got the majority of our futures are front month futures, which are the OCC futures, 42,000 contracts. Then we've got 7,400 contracts of the NOV futures. So every day, like 1/30th of these OCC futures are going bye-bye, and the NOV ones are coming on. As people come in and buy and sell UVXY, they're gonna buy and sell futures to adjust things, to get things to the NAV, but it's based on a specific formula that follows this index. And here I'm going to type the name of the index in, SP, because I always forget it, so I have it actually written down by my computer. But SPVXSPID. This is server address. Oh, it's not a server address. That's why. This is the actual index that UVXY is based on, and we'll pull it up in Thinkorswim here for a second. And so they're going to make markets around this, but just remembering that UVXY is a 1.5 times leveraged fund, and this is just 1 times leverage. So that beta drift from leveraging is going to adjust things. But you can see, and this is keeping 30 days out. So it's doing the same thing the futures are, adjusting every day. And these are going to stay in line with each other. And UVXY has to stay in line with this particular thing. I'm not sure if that completely answers your question or not. They're bound to use only the front and second month futures plus swaps that emulate that same thing. Half of my screen is black. Oh boy. Let me take a look. Oh, you mean that part on the side? Yeah, I apologize. I'm gonna have to work on my streaming stuff here because I'm not doing a great job with it. Let's see if I can fix that. I will work on my presentation somewhat. Yeah, it does look like half of that's black. We'll fix that. So anyways, just to sum things up here, we did get a pop Friday, but it didn't change the structure of the term structure a whole lot. So it's not, so that is good for us who are short this because it means we still are keeping in a position where we can get maximum decay out of this thing. And, you know, my
my kind of game plan with that, with the position where we need to be between 18 and 24, is that that means essentially we just need this to decay by $1.30 in the next 2 months, right? And so if we're at let's say we're at 6% contango, which is pretty close to where we are. If we multiply 6% contango, which would be like 0.06 times the price of UVXY right now, which we might say was 25, that you get 1.5. So what that means is that at this contango rate right here, this thing is decaying by about $1.50 each month. So if the VIX, essentially what that means is that if the VIX stays right here, this will decay down to being a maximum profitability. It will decay down by $1.50 in 1 month. In 2 months, it will be decayed by $3. So we would go from 25 to 22, which is well in the safety range of this trade being profitable. And we also have other things like beta drift and stuff that help us out. However, if the VIX were to pop a little bit higher, then it gets a little bit closer. But we can always adjust as time goes by. But I'm just happy with the fact that we did cover our short a couple days ago, so we didn't get dinged too bad on the way up here, and we're maintaining this position. Now, I've thought a little bit about actually switching over to the bullseye strategy thing. The bullseye strategy thing would be to hold on, make you dead, guys. Okay, but if the VIX still goes to say 4% in a day, contango isn't going to save your bacon if you're short at the money calls expiring in 3 or 4 days. That is very, very, very true. I'm going to get to your split question in a second. Yes, that's very true. That is why I would recommend, if you're shorting this, that you move out in time. Now, if you do have calls that are expiring in a couple days, you can always roll them out another week, right? But another way to do it is for this particular position, which we're showing you here, that we're following, it expires in 54 days. So my whole strategy, what you say, just roll. Yeah, you could just roll the calls that you're short out, because then you've got that weekly decay that's going in your favor each week, and you just hang out and wait until, and then just keep rolling it every week until UVXY is down below there. And each week you've got that decay. You've got like the front week decay is the most decay you can have, and you've got that going for you every day. And the only issue is sometimes is that if it really spikes really far and you're like rolling out, like let's say it spikes to like 40 and you're rolling out like the 23 calls, those aren't going to have a lot of premium in them, but you kind of just have to keep rolling it out. Mickey Dead, guys, my idea with my position that I have on now is possibly to switch it to what you're talking about, and just because we have $6,000 in buying power, so that's enough to have like 2 at the money calls short, and just roll it out in like that bullseye style. So it would be to wipe this position we have clean, take it off, and just sell some at the money call. So let's take a look at what we might sell. And I'm getting back to the other question in just a second. So I already started kind of doing it with spreads here. I've got this 23-26 spread that I sold, but it could just be selling the 25 call or the 23 call, right? You could sell 2 of those with a $6,000 account and have enough buying power to just hang out. And if you did that, let's take a look at our Analyze tab here. So if we were just short, I can leave this on. If we were just short 2 of the 23 calls, it would make us short 156 deltas, collecting 16 a day, and it would cost us 5,600. So we'd have plenty of room in our position to withstand that. So that would be, it's a good way of doing things, and I actually like that. I like the fact that they charge you a lot of buying power to do this, because it kind of keeps you out of trouble. Doesn't UVXY reverse split a lot? How does that affect your positions? Well, but it has expired. It has reverse split a lot in the past, but now that we've switched from 2 times leverage to 1.5 times leverage, it's been a while actually since we reverse split. But the way it's going to affect your positions is, I actually like it when it splits because, it seems like
there's more play in an issue that's trading like $30 or something. Once it gets down to like $8-7, it doesn't feel as like the distance between the strikes is so small. I don't know. It doesn't operate as well when it gets really down to those low prices. And yeah, a reverse split, it's just like with a stock. A reverse split doesn't mean it's going to rally or sell off that day. It sometimes it brings publicity to it and whatnot, but the options just split. So they're and they put new options on with the proper the proper setup, and the old options roll off in a couple months and become illiquid and roll off. So we haven't gone through one of those in, I don't know, is it a year or two or something? But it's no big deal. As we go through it, we'll just go over how it works, and it kind of operates pretty easily. Options adjust with a split, but then they'll bring new options on post-split. And if you've got long-term positions, you probably want to roll them over. When you have an issue that has split recently, you'll see there's like different Jan issues. There's Jan issues that are pre-split, post-split, and there's liquidity issues if you leave the Jan ones on. That's the thing of like, if you wanted to trade UVXY Jan like 2 years out from now, those are probably going to become, you can see when I pull up these options actually here, check it out. You can see when you pull up the series in Jan, there's these 20 out of 100. Those options are post-split. That used to be UVXY back then it split 5-for-1, and those are the old options that are still left over. All the other options are new after the split there. So yeah, you've got options that are adjust with a split, and then you're going to have the new ones after the split, and they're both going to do kind of the same thing, but more people are going to trade the newer ones, and so you'll get out of your positions and whatnot. You get out of your positions as the stuff happens. But split's no big deal. It's easy to deal with. They'll probably announce it when UVXY gets to like $8. We're still a little ways from there now. It would be great if it happened this year, because that would mean that we've had some decay and we've moved lower. I personally wish that we had not gone and got nerfed to 1.5 times leveraging, but that was the case. All right, so I'm going to leave it there for now. Thanks so much for joining me, everybody, and commenting. You guys are great, and welcome to any new people, and I'll see you in the next one. Good luck with trading this week. I should be back. I will be back on tomorrow at 9 a.m. So meet me at 9 a.m. tomorrow. We'll get a good chat going, and I can answer more of your questions. Thanks, folks, for joining, and thank you guys especially for joining in the chat. We'll see you soon.